Hello, everyone. I just opened a chat. So please let me know if you can hear me well. Okay. So on the right side, you have a chat. And if you hear me well and you see the presentation, please let me know and we can start. Of course, sincere apologies for the technical issues that we encountered on Tuesday. Also, I hope you will be able to hear me, not only because of the microphone, but also because of the flu that I got. Okay, so we'll wait just a minute. We can start. Okay, so let's start. So thank you very much for joining the webinar, the live webinar. Once again, sincere apologies for the technical issues that we encountered on Tuesday. Of course, the presentation will be later provided to you as we are recording it. So if you have later anything, don't worry, we'll provide you with a link. So the topic of today's webinar is about actually stripping down the pros and cons of and what's fun and what's not fun about building a product in a fintech area. So of course, first I'll show you the obstacles that you will encounter if you're building your fintech startup, and also I will show you the ways that you can and the initiatives that are out there that actually helps building product in fintech area. Of course, a little bit about me. I'm Mateusz Łukaszewski. I'm a Chief Executive Officer at Ideason, where we provide software engineering services to finance industry, and we feel very confident and strong about a couple of core competencies, which are payments, crowdfunding platforms, but also robotics, automation, and very, very fresh PSD2 interface that we are introducing to financial institutions as well. So let's start. The first obstacle is how many new regulations came after the crash in 2008. Of course, because of the huge bubble and the unregulated market, a lot of financial institutions, due to basically subprimes, so giving additional additional credits to people on existing already existing properties, and it just created a bubble, and they could not be longer paid. So because of that, new regulations came. Um, of course, the, the fines that had been uh, paid through 2009 to 2015 was tremendous, 150 billion US dollars. Also, one employee of Credit Suisse was sentenced because of the frauds that he committed. So because of it, now the more strict risk management regulations came into place. For example, IFRS 9 that is coming next year, which is a European regulation that forces financial institutions to estimate credit loss with forward-thinking metrics, not only with the historical data that they have. And new regulations are coming every year. Of course, this also have some pros, but unfortunately, because of expanding globally with financial products, it's very difficult to do. As of course, there are, for example, European Union regulations, but every country has its own definition and draft that has to be compliant with EU regulation as well. So every country, and expanding to every country also involves a lot of additional legal fees to understand the market and to adjust it to existing environment. And the second obstacle is actually that traditional banking and financial institutions are very large, and they are still having a prime role on a financial market. And that's because of the huge, large pool of clients comparing to FinTechs. Unfortunately, it just makes it much more easier for banks to introduce new innovations. Although on one hand, banks have difficulties to introduce innovations, but if they do, the deployment of this innovation has a better effect because they have a huge pool of clients. Also, they already are regulated, so so they have to comply with all the regulations, and everything is already in place. So, for example, regulation about knowing your customer, or anti-money laundering regulations, and managing risk of fraudulent is just implemented there. So it's much more easy for them to implement new solution in terms of compliance. Also, although banks really the effect of a crisis was very huge on banks. However, this actually also increased a higher transparency and data visibility. So after the crisis and all the regulations that there has to be, banks has to be compliant, people actually are believing and trusting banks more than before. And also the scale of the market. I just compared here a lending club, US-based peer-to-peer lending website. Just the credit card debt, comparing these two. So the credit debt created by banks to do this P2P lending is it's 9 billion to almost $900 billion. So the market that banks are operating is still very, very huge. Also, fintech innovation requires a particular set of skills. What do I mean by that? From one side, unfortunately, young entrepreneurs, young people without any banking background, without understanding the complexity of this market, and also having a very deep market insight, meaning knowing what are the trends and where the market will be moving later. It's very difficult for young entrepreneurs to create a financial startup because veterans that has experience in that field just knows the market, they have the network of people, and it's just better for them, it's easier for them to convince investors due to their expertise. And also, actually, there's one finding very interesting that tells that on average, founders in fintech industry are 10 years older than in other verticals. So it just shows that you have to have this expertise in the financial market to be able to operate in the market very well. And the fourth obstacle is about data and information challenges that came, and also as I said before, it creates more and more legal fees that simply small startups cannot afford. And for example, just next year, the new regulation live, which is called GDPR, General Data Protection Regulation. And it's a very restrictive and data protection regulation that has been updated from the previous one that has been implemented in 95, I believe. And unfortunately, that might apply fines for up to 20 million euro if you're not compliant with the regulations, or 4% of global turnover. So it's very restrictive, and it can very well hurt business. And also gives more. It gives also more. How may I say it? Leading to EU citizens, because they have right now, they will have better rights to protect their personal data. And also it affects a global market because every company outside EU have to also be compliant with this regulation if they handle personal data of customers in EU. The money laundering regulation is also very important. Unfortunately, it requires additional implementation of different modules to actually scan and manage the risk of fraudulent and laundering money So you have to be compliant and look at the watch list for suspicious personalities, but also look for very important people, politicians. So it requires just much more operations that are actually not making money but creating only costs. And as well as FATCA, which is a cross-border tax compliance, just to unify the tax compliance globally. So the authorities will be giving detailed account information for US taxpayers. So if you are working with US market or your clients are paying taxes in EU, either they are or people, you have to also be compliant with that regulation. So what's the result of all those obstacles? Basically, it creates just long product development cycles with endless obstacles because first of all, you have to be expert in your field. So you have a valid proposition to the problem you want to solve. And so you have to understand the complexity of the financial market and also the regulations that are out there. And unfortunately, it requires for you to move all those complex regulations to the architecture of your product. So it will be ready from the start to be compliant with it. So you also require constant reiteration and unfortunately unplanned IT efforts because regulations are coming every year, new regulations, you have to adjust to new things. And also the market itself is very fluctuous. So the new trends are coming into way. And new challenges are there as well as banks that are very aggressively trying to defend their status. So it requires also a lot of reiterations and pivots. So how to overcome these obstacles? I would mention four very interesting categories how can help you to build your product. So from one side, every country, not every, but more and more countries are introducing regulatory sandboxes. So, for example, there is also already industry sandbox in the UK, and Poland is also, for example, will introduce regulatory sandbox probably within a year. So how it helps? First of all, it creates an environmental laboratory environment when you can actually experiment with your product on the environment that is not affecting any operations of banks and so. So Sandbox is gathering different market players, financial institutions, banks, startups, and also regulators. So the startup can access the API portal to have different data sets, applications, information about different transactions to test their value proposition, to test their product and see if it might be compliant and if it's really possible to even deploy your product to the existing environment. So regulatory sandbox is giving you testing environment when you can play around with different data about transactions. You can connect to banks and so on to test your and validate your product. I highly recommend get to this link I mentioned here, Sandbox dash blueprint, where they explain more in depth what is it about. The next thing is also, on the other hand, regulators are making the market more restrictive to manage the risk and to avoid the 2008 crash. But also, there are different very interesting initiatives that support and educate founders and their endeavors with their product. I highly recommend to, if you're on a UK market, to go to Innovate Finance. This is a huge network of different financial institutions and different very interesting networking events where you can meet with key decision makers and also go to different workshops to work on your hypothesis and create first pilots, hopefully. There are different also initiatives on different markets. So Australia has the FinTech Advisory Group, and the US has the Office of the Comptroller of the Currency. So I highly suggest you, if you're on these markets, just go visit his website. There's a ton of information how they can help you and support your operations. But also, for example, Europe is trying to, EU Commission is trying to drive the innovation in our market by introducing the PSD2 regulation, Payment System Directive. There is an updated version of the previous regulation, and it's the initiative for open banking, meaning banks will be forced to show their account information data and payment information data to all the third-party providers that, of course, are compliant with this regulation and has the consent of the customer to use their data. So thanks to that, there will be different use cases, for example, multi-banking. So they will be creating new startups that will be aggregating different data. They will be initiating payments through their applications, not from the bank applications. So there will be a huge possibility for implementing artificial intelligence, machine learning. That it's simply much more easy to implement by startups than large institutions. There also is a SEPA regulation that improves cross-border payments in euro currency. So it unifies and standardizes the process across different EU countries when it comes to the money transfer, payment transfers. And also ISO 222, which is a very good set of best practices when it comes to streamlining, for example, communication of infrastructure, and also unifying the common language when it comes to financial communication for the payments, and introducing new financial products to the market. So there's a rule of best practices that you can actually read. It's free, so I highly recommend. And the last one, I believe, the third one, is about FinTech supporting FinTechs. So there are different. So there's also market for startups that will be enabling different FinTech startups to work better and to deploy and test their hypotheses faster. So, for example, there are different open web APIs that you currently can connect to. For example, Yodlee gives you a consumer transaction data. So if you are a startup that will be handling transaction data and you want to do something very new about this, then Yodlee is a way to go because you can test your hypothesis. Other one is Card.io, which is a software development toolkit. So you have all the development libraries to onboard payment cards into mobile apps, and this is very secured, library set that you can implement to your own product. So you can, for example, scan credit cards, payment cards, with your phone, and it will be transferred already to, for example, to your application in a very secured way. There's also Xignite, where you can play around with like live stock prices if you're on the market, or Stripe. I believe that they're the biggest payment processor uh, in the world, US based, that it's supporting startups. For example, they have this initiative where you pay 300 US dollars and they are supporting you. They are doing all the paperwork to set up a company in US on your behalf, and also helping you with implementation of payment acceptance method. I want you to take this presentation more of a brief understanding what's out there, so you can actually make a more in-depth research there, but also have some inspiration to work on your product further. And the last is that actually, on one hand, banks are trying to prevent their market status, their leading role, but also they are supporting FinTechs initiatives, because some banks are seeing better results of cooperating with FinTechs and fighting with them. So, for example, Credit Agricole opened their core banking API, so new startups can create new apps on top of their services. So you are able to work with Credit Agricole's data to to create your startup. For Credit Agricole, of course, brings a better value chain, but for you also a good customer base. For example, Barclays, I didn't mention it here, but they have their own FinTech initiative that they incubator, accelerator, that actually for the chosen startups that are selected later by Barclays can access their API and work with their data. What's very brave also is Goldman Sachs, that moved all their proprietary source code on GitHub, which is a source code repository. So from the one hand, Goldman Sachs is counting on improving efficiency of their source code, but also looking for introducing new innovations to their core banking. So I think that's all. Maybe the last thing, I also highly recommend going to the bank-funded accelerators list. I mentioned here the link corp-accelerators-db, which lists all the bank-funded accelerators. I mean, all corporate accelerators, but there are around 80 bank-funded accelerators. So if you're looking for support from banks, I really suggest you to go there for it. So thank you very much. I see that we actually squeezed the presentation into 30 minutes. Maybe it's due to my sickness. But if you have any questions, I'm looking forward to it. You have my email address here. I can also send you a presentation if you just ask for it. So thank you very much for coming today, and have a nice evening.